Hi, folks, and welcome back. Now we're on to Chapter 5, Unemployment Compensation Taxes. As has been the habit, I will not be spending too much time on the slides. I will give you some sample problems at the end, and then we can take it from there. We talked about this, I think, in the first chapter, the FUTA and the SUTA. The federal unemployment tax, FUTA, that pays just administrative charges, fees. Where the SUTA, it actually pays the benefits to the person claiming unemployment. You can look through all these as we go through. One thing I want to point out, as you're going to see in one of your homework problems, that some employees are exempt from unemployment. So make sure you know who they are, especially like these ones here. So know that when you get to that problem later on. FUTA, the cap base, is $7,000. So at $7,000, you do not have to pay, the employer does not have to pay FUTA on its employees anymore. The FUTA rate is 6% on, like we said, the first $7,000. But the key here is you can claim a 5.4% credit against FUTA for your SUTA taxes. So your net FUTA is only going to be 0.6%. How do you get that credit? If you make your contributions to your state unemployment on a timely basis, then you can obtain this maximum credit of 5.4% against your FUTA. Your SUTA rates are based on your experience rating. The more employees you have making claims against you, the higher your rate may be. If you don't have employees making claims against you, then your rate is going to be better. So if you were running a construction company and you had your employees working over the summer, and then they were laid off during the winter, and many of them are collecting unemployment, that's going to affect the rate that you're going to have to pay for your state unemployment tax. How do we calculate it? Let's take a look at one example really quick here. Sumatra Imports, based in New Mexico, has a SUTA tax rate of 4.2%. with a taxable SUTA wage base of $24,100 for each employee's earnings. In 2016, Sumatra had FUTA taxes payable or wages of $109,500 and SUTA wages, taxable wages of $298,700. So we need to compute both. So for FUTA, taxable rate $109,500 times 0.6%, so that's 0.006. So the tax for FUTA, $657. For SUTA, told me it was $298,700, and our tax rate is 4.2%, so 0.042. So our state unemployment tax is $12,545. Sorry. 545.40. Just like we had to file Form 941 for our federal taxes and our Social Security, we have to file Form 940 at the end of the year for our unemployment taxes. So it's due by January 31st of the next year after year ends. I don't have a good example for you, so I'm just going to bring you right to the one in your book to walk us through this a little bit. So this is right in your textbook. You should take a look at it. I can't get you a better picture than this. I had to enlarge it so you could see it. But for our 940, our tax return, for our unemployment, we have the name of our company and our employer identification number. Now we come in here, we have the total payments to all of our employees for the year. From that, there's going to be some payments that are exempt from FUTA tax. And also, we're going to have payments that are made in excess of $7,000 to our employees. Remember, we only have to pay federal and state unemployment tax on the first $7,000 they make. For federal, each state has its own tax rate, but for the federal, it's on the first $7,000. So this is the amount that's paid above $7,000 to our employees. So So we're going to add these two together. We're going to subtract them from our total wages, and it gives us our total federal unemployment tax that we have to pay on. We multiply that by 0.006 or 0.6% to give us $583.30. If we have a credit reduction, then we have to fill out Schedule A and bring that number across. So let's go take a look at that, where we get that number from. So for Schedule A, once again, our name of our company, our employer identification number, and then we go to the states that we did work in, where our employees got paid. So some were paid in Ohio, some were in Pennsylvania. You see Pennsylvania has no tax, so we don't have to worry about it, where Ohio has 0.015. So we're going to take the wages earned in Ohio, multiply it by 0.015 to get our 523.77. We add up all of our states, and we're going to bring this number down over to our Form 940. For our state unemployment, as it says, the rates and the forms vary by state. So each state has its own set for state unemployment. So make sure in your state you know, or the state you're working in, you know what the regulations are. Now let's try some examples. Cowan Company paid wages of $2,450 in August and September. And for the last quarter of the year, October through December, they had taxable wages of $3,900. None of the employees was paid more than $7,000. So what is the net FUTA tax? $2,450 plus $3,900 equals $6,350 times my 0.006. So my net FUTA tax is $38.10. Let's shrink this down a little bit so you can see it. September 2017, Payroll Ch company began operations in a state that requires new employers of one or more individuals to pay a state unemployment tax of 4.1% on the first $7,000 of wages paid to each employee. And then here's our information: total wages paid, salaries of the president, the vice president. No other employees received wages in excess of $7,000. Included in the wages was $900 paid to a director who only attended a director's meeting. $6,300 was paid to a factory superintendent. $2,000 employee contributions to cafeteria plans, and a payment of $2,000 was made to an accounting firm. So let's take a look at what we have going on. So we have to figure out our FUTA and our SUTA taxes. Total wages, $212,640. We only have to pay on the first $7,000 for the president and the vice president. So that's $18,000 over the limit, and that's $8,000 over the limit. So that's $26,000 that we do not have to pay on. Money paid to the director, that we do not have to pay unemployment on. And the $2,000 for the cafeteria plan, we don't have to pay unemployment on that. So that brings our total amount down to $183,740. So for my FUTA, $183,740 times my 0.006. So my FUTA tax, I already got the dollar sign there, is $1,102.44. For SUTA, they get the same breaks. So $183,740 times my state tax rate of 0.041. So my state taxes are $7,533.34. Here's a couple of easy ones. Zero company has SUTA tax rate of 6.3%, taxable payroll of $77,000. FUTA, 77,000 times 0.006, $462. State tax rate, 77,000 times 0.063 gives me a state tax of 4,851. Yeah, that's a pretty cool line. Yingling Company's payroll for the year is 593,150. Paid in excess of 7,000 is 211,630. Gives me a difference of 381,520. Lost my pen. 381,520. Going to take that, 381,520 times 0.006. So my FUTA is $2,289.12. Take that same 381,520, multiply it by my state tax rate, 0.029. That gives me a state tax of 11,064.08. Okay, let's take a look at Ken. Ken worked for his company, but he was transferred from a factory in one state to one in another state. He went from Louisiana to Florida. The state rate in Louisiana was 3.2% on a limit of $7,700, and the state rate in Florida was 3.8% with a limit of $7,000. Ken was paid $14,190 for the year. Of that, $4,950 was paid in Louisiana. The rest was paid in Florida. For Louisiana, he made $4,950. We're going to multiply that by 0.032. So in Louisiana, he had to pay $158.40. In Florida, where he works second, they have a limit of $7,000. He only has to pay $7,000 on his total wages, no matter where he earned it. He already earned $49.50 in the one state, so that leaves him $20.50. And we multiply that by the Florida tax rate of 0.038. And then his Florida tax is $77.90. And then he has to, on his FUTA, we know it's on the first 7,000 he makes, and he has to pay 0.006%. So his federal unemployment tax we have to pay on him is $42. For Shoop Company, was subject to a New Jersey state unemployment rate of 5.1%. Taxable wages for the FUTA was $93,400, and for SUTA was $194,300. So their state unemployment, $194,300 times the rate, 0.051, and they have a state tax. They have a state tax of $9,909.30. FUTA, $93,400 times my 0.006. So they have a FUTA tax rate of $560.40 on their employees. Last but not least, sometimes some states they're going to make the employee contribute towards the unemployment fund. So for New Jersey, the rate is 0.705% on the first $32,600 the employee makes. So they don't tell us about anybody making more than that or reducing that. Total pay, $194,300 times 0.00705. So the employee has to contribute out of their pay $42. That's not each employee. That's just on the total amount coming from the employees is $42. So we just be peanuts for each employee. Okay, in this last problem, we're going to have a few extra steps, and we'll show you. So, Conrad Company is located in State A, has an annual payroll of $1,150,000 for three 12-month periods ending June 30th, 2016. As of June 30th, 2016, the total contributions made into Conrad's reserve account in excess of benefits charged amounted to $21,560. Sometimes companies can put money into a reserve account to help reduce their overall tax burden for the unemployment tax. So first thing we want to do is figure out Conrad's reserve ratio. Their benefits was 21,560. Divide that by their average payroll of $1,150,000 and turn it into a percent, and it's 1.7848%. So our reserve ratio is 1.8748%. So we look up here, we find it at least 1.8%, but less than 2%. So we find out our reserve ratio is 5.2. So our contribution rate is 5.2. Now as you scroll down, what's the smallest contribution needed in order to reduce the tax rate if State A permits voluntary contributions? So what do we have to pay to get to that 2% level? I'm glad you asked. Let's figure it out. Our total payroll is $1,150,000. We want to move to that new level, that 2% level. So we're going to multiply this by 0.02, 2%, and that's $23,000. We saw up above, we've already paid $21,560. So to get to that next level, we need $23,000 to get to the next level. We've paid $21,560, so we need an additional $1,440 to qualify for that next level. And lastly, what's the tax savings realized by a company taking into consideration a voluntary contribution made of taxable payroll in 2017 was $1,295,000. So our tax, $1,295,000 on our payroll. Without the contribution, we know it was 0.52%. So that's $67,340. If we made the additional voluntary contribution and we reduced it to 0.049 or 4.9%, we multiply it, that's $63,455. So the difference between the two is $3,885. We saw up above we needed an additional contribution of $1,440 to get to that amount. So $2,445 is the amount of savings we'll realize by making these voluntary contributions. I hope the zingers didn't confuse you too much, but that's some examples for you, similar to what you're going to be doing in your homework. I hope you find them useful. As always, if you have any questions, please feel free to contact me. Otherwise, good luck with your homework.